Right, I think we'll get going. There will be people joining as we go, and just for everybody's knowledge, this is going to be recorded for today and shared obviously on our YouTube channel a bit later this afternoon. So first of all, thank you for joining us for the people in South Africa, Singapore, and across some of the other territories that we have a community building, and special welcome to our members as well as the broader chamber community to join today's opportunities, challenges, and the macro outlook for South Africa. I think a really relevant topic for where we are at the moment. It's been a hell of a 4 months, I think, for globally as well as for South Africa. And we've got a really great bit of content from our key member, APSA, to share with you guys today. Just as a little overview in terms of the agenda, just the welcome which I've done from the Chamber of Commerce. My name's Nigel Ritson, the President of the Chamber of Commerce for South Africa and Singapore. And we are building a nice community of members and a business community in Singapore as we speak. Currently, I'm in South Africa and currently at home, as you can see, down with COVID-19. It's finally arrived for me. So really relevant for the topical discussion today. Just an introduction to our key member, APSA Corporate and Investment Banking, and Prem Naidu, as well as Jeff Gable, will be talking today in terms of some findings and the outlook for South Africa, which I'm sure we all are very keen on understanding what's going on and the outlook for South Africa into the coming months. Right, after Jeff has finished his piece, we'll go into the Q&A session. Please put any questions that you might have into the chat option at the top of your screen. You've got a little chat option you can go and put in there, and we will try and get to those. We'll try and get to those questions and answer them towards the end of the presentation. We're going to try and leave the majority of today to Jeff, as that's the core reason why we're all here. So just a little bit of an introduction to who's who. Prem, or Pramesh Naidu, is the Managing Director of Head of Middle East and Asia Corridor at APSA, and he'll be doing a little intro in terms of what he's been up to in the last couple of months, traveling around Southeast Asia and seeing some opportunities for growth in those territories. And then Jeff, who's no stranger to the Chamber, we did a nice budget talk last year, Head of Research at APSA, Corporate Investment Banking. He's got a few titles, which we discussed a while back, but his role in APSA hasn't changed in those years. And then obviously myself, President of the Chamber of Commerce, as well as CEO of Rubla, a software business in Singapore and South Africa. So without further ado, introduction to Prem. Prem, do you want to introduce yourself and tell us what you've been up to?
Thanks, Nigel, and really appreciate. I think you have introduced me a little bit, but just to repeat some of it. So I look after what we call our Middle East and Asia corridor for APSA Corporate and Investment Banking. And I think it's one of the 4 international corridors where APSA is trying to build up relationships with multinational corporates looking to trade or invest in Africa. And I think as part of the structure that we've set ourselves, a key part of it was the strategic relationships that we've developed, and certainly the SA Chamber in Singapore is one of those relationships. And I think over the last 2 years and multiple events later, thanks to you, Nigel, and the rest of the team for your ongoing support. And I think it also speaks to APSA's strong history in terms of supporting multinationals in taking advantage of many of the opportunities in Africa and also obviously South Africa, which I think Jeff will talk to some of the opportunities later on. But I think, interestingly, I was meant to have been in Singapore this week. One of the big challenges was actually to try to get a flight to Singapore, and also, the demand reflects in the costs of those flights as well. And I think that's actually in a weird sort of way, it's actually a good thing because it shows an absolute resurgence in terms of travel and business activity. And certainly, face-to-face meetings, which ultimately and hopefully will result in additional levels of business activities, particularly related to Africa. I think perhaps many of the attendees today are quite familiar with ABSA. I would certainly hope so, given the number of events that we've had thus far. But just a few comments on ABSA, if I may. And I hope that some of the attendees will now start recognizing us as a leading Pan-African bank, independently managed out of Johannesburg, with subsidiaries in 12 sub-Saharan African countries, and also rep offices in the US and UK. So as ABSA Corporate and Investment Banking, we're obviously a full service corporate and investment bank, covering mostly corporate clients and providing for their solutions across from transactional banking, trade and treasury solutions, various financing products and debt solutions, as well as investment banking solutions. And I think a key part of the strategy for our Middle East and Asia business is trying to, as I said earlier, establish relationships with those corporates based across Middle East and Asia, looking to trade or invest in the African market. And in particular, we've identified that Singapore is a geography of specific interest. And we've certainly seen that in terms of the engagements that we've been having over the last couple of years. One of the key differentiators that we like to hang our hat on is the fact that we have local operational execution excellence in each of the countries that we are present in, combined with in-depth market knowledge, and then also now a network of international coverage, primarily to try and build, as I said earlier, relationships with multinationals. I think in addition to that, we've got very deep sector specialization, and I'll talk a little bit just now in terms of how that could be helpful to many clients operating out of Southeast Asia. You mentioned that we've been quite busy in terms of the Middle East and Asia corridor, and that's certainly the truth. We've had a number of face-to-face engagements as the lockdown measures have been relaxed and as countries have been opening up their borders. In particular, we've spent a lot of time out in the UAE, in India, where I spent just over 2 weeks meeting with a number of clients, and then also particularly in Korea. So I was in Korea all of last week, and we had arranged 2 events with your sister body, the SA Chamber of Commerce in Korea. And we were quite grateful to have the participation of the South African Embassy as well as Ambassador Dlamini at these events. And it was a fantastic turnout. I think we probably had in excess of 80 people across the 2 events. And these are effectively 80 Korean businesses with a fairly deep level of interest in operating and looking at opportunities in Africa. Also met with a number of the Korean banks. And I think the very positive takeaway was the level of engagement and also the willingness to strategically partner with ABSA in terms of taking advantage of the many opportunities that the Koreans themselves are starting to realize in Africa. We are quite grateful to acknowledge that we have probably over 100 Asian companies who currently deal with ABSA, and I think honestly that's really just scratching the surface. I think there's a lot more out there, and certainly we're quite keen to establish those relationships. Over the last year or so, we've been quite busy putting together a strategy, particularly focusing on commodity traders based out of Singapore. And you may recall that probably about 18 months ago, there was a fair amount of negative press around commodity traders in Singapore, and there were a few commodity trader failures, which quite materially impacted a number of the international banks, with losses adding up to hundreds of millions of dollars. But in and amongst that noise, there's also a number of highly reputable commodity trader firms who are very active on the African continent. And very happy to say that we've actually been quite successful in that space, and probably I'm now banking about 4 or 5 additional commodity trader firms and taking quite significant risk positions from a structured trade and lending perspective against some of these firms. And this is an area that we've identified for further growth in the years ahead. Maybe just to touch briefly on some of the investment themes that we're seeing across Africa, and certainly some of the things that are topical in the client conversations that we're having. I think what's most interesting is over the recent past, we've seen an acceleration of interest in merger and acquisition type activity. So this is particularly multinationals trying to establish a presence on the African continent, and in doing so, wanting to do that through existing businesses that are well established in Africa. So acquire a local footprint, a local management team, bring in international expertise and capital. And a lot of the motivation behind that is wanting to establish some level of manufacturing and distribution capability in Africa, particularly to take advantage of the African Continental Free Trade Area Agreement, which has been in existence for just over a year now. And I think some of those opportunities are starting to flow through, maybe a little bit slow at this point, but certainly I think the bigger opportunity in terms of addressing a population of 1.3 billion people across 54 countries and on a tariff-free basis is quite attractive for multinationals. I think certainly we've also seen a huge amount of interest in terms of agriculture, both sourcing agricultural commodity products out of Africa, some level of beneficiation, as well as importing product into Africa to take advantage of the large and growing consumer market here. We've also seen a massive amount of interest in terms of infrastructure development across the continent. We've also seen various announcements from a South African perspective in terms of commitments from the government in terms of leading infrastructure growth through infrastructure investment. Leading economic growth through infrastructure investment. And this is across areas like power and energy, and I think many of the people in the audience will be well aware of some of the electricity challenges that we're having in South Africa. But the positive to that is the massive focus on renewable energy projects and a commitment from the government in terms of delivering on those projects. I mentioned the African Continental Free Trade Area Agreement. I think a big theme around that is the massive improvement and investment that's required across roads, rail, and ports infrastructure, which is severely underdeveloped across the African continent. So governments have obviously realized this, and we're seeing them being quite active in terms of public-private partnerships to invest in port development, in rail development, etc. And certainly many multinational EPCs see the opportunity and are quite keen to get involved. Healthcare, Nigel, as you probably well aware right now, has also increased in terms of profile and in terms of potential investment opportunities, given the COVID crisis, but also I think a realization that there needs to be some proactive measures for the next health crisis that is bound to hit the global population, and particularly the population of Africa, where, as we're all aware, healthcare services are not widely available, very expensive, and unfortunately, also reflects some of the inequality across Africa in terms of what's available to rich people versus what's available to those that are not of good means. I think the final point in terms of the investment opportunities are the very strong drive towards digitization of various products and services. So we've seen many smart government type projects come to fruition, and certainly an acceleration of those, as it can certainly help in terms of governance on the African continent, but also in terms of just the consumer demand for access to the internet, access to other digital services, and just media content. Things like YouTube. We were joking about TikTok earlier, etc. And I think a big supporter to that consumer demand is the growth and investment in data centers across the continent. And we're probably seeing billions of dollars being committed towards those types of projects. And also the undersea cables that are now servicing the African continent. I think there's been a massive explosion in terms of data flow capacity to and from Africa over the last 5 years or so. And certainly that's helping as an enabler towards the digitalization of the continent. I've spoken a lot, and I think I'll let me pause there, but maybe to bring a more realistic view of the challenges and opportunities for South Africa, and perhaps a little bit on Africa as well. I'd like to hand over to Jeff Gable. Jeff, as Nigel has indicated, is the Chief Economist and also Head of Research at ABSA Corporate and Investment Banking. And I'd like to say that under his leadership, ABSA Research has attained a number of number one rated awards and accolades. And it speaks to the quality of research that comes from Jeff's team. So Jeff, across to you.
With that very kind introduction, thank you everybody for joining us. I think you'll share my opinion here when I suggested of Nigel, myself, and Prem. Prem looks most closely like the profile picture that was on the invite to this, whereas Nigel and myself are obviously taking a little bit more strain under the last 2 years of COVID. I'm going to talk a little bit through some of the current challenges. So speak to Russia, Ukraine, and what that might mean for us here in South Africa. Give a quick update around sort of the challenge that is COVID, but then try to make the point that it's some of the longer term challenges that South Africa's been facing that are really now starting to generate an impulse for change, not just from business and from households, but within government as well. And I think that leads us as a country into a sort of a more favorable place in the periods ahead. So that's what I'm going to look to motivate here. As a starting point then, let's see if I've got here we go. As a starting point then, maybe just to share some quick thoughts around where we are in Russia, Ukraine, and what that might mean for South Africa. Here we go. So there's kind of four broad areas here that I think it sort of matters, and in no particular order. One, there's sort of themes around South Africa potentially being caught in the crosshairs, right? So like much of the Western world, we're super focused on ensuring that where sanctions exist, whether it be in the financial system or elsewhere, we're very much on top of those, in line, monitoring daily, want to be sure that there's not a hiccup somewhere in the system here that suddenly puts South Africa on the wrong side of these sanctions and boycotts, what have you. There's real questions globally and certainly here in South Africa around sort of threats to cybersecurity, though I think it's fair to say that as a risk so far feels maybe a little bit overblown, to knock on wood. And then I know for people who follow South Africa closely or here in South Africa, there's an awful number of people who frankly are a little bit disappointed in South Africa's diplomacy and diplomatic position vis-a-vis Russia, Ukraine to date. And on that side, I would sort of only offer the idea that countries haven't been forced to choose right now, and South Africa is probably using some of this middle ground ambiguity to keep close to some of our partners in parts of BRICS, for example, while still making sure that we're seen as a valuable partner to Europe and Asia and elsewhere. Of course, there's the economic components of this around the growth outlook and inflation and threats to supply chain. Here in South Africa, we're not alone in seeing very significant increases in the price of petrol. Sort of looking forward, looking to sort of significant increases in the price of various foodstuffs. We're trying to work out, both as consumers here in South Africa, but also as manufacturers. We have a very significant automotive OEM industry here in South Africa, for example, and trying to work out these new sort of supply chains and various bottlenecks and what might mean for the near term, but also are issues of sort of onshoring in the periods ahead. It's around uncertainty and risk aversion, and it's all sort of getting caught up one in another. So if we were in an environment where 2022 was already going to be a period where the US Federal Reserve was going to need to have some version of tightening, where other rich world central banks and fiscal policy makers are going to need to start thinking quite seriously about undoing some of the impulse delivered into their economies during COVID. Well, Russia-Ukraine just sort of accelerates that in many ways. So there's a question around for a country like South Africa, a small open economy, sort of what this means in terms of the direction for the rand, in terms of direction for our own policy rates, for funding further out on the curve. And then for all of us in the global economy, there's these questions about the long-term consequences of what we're seeing. Is this a return to the Cold War? Let's hope it's not a return to a hot war, broader than within Ukraine's borders. Questions around who might be next, but then sort of more curious questions again around sort of the direction of globalization and whether this is just yet another impulse to try to sort of thwart this at the edges, around sort of decarbonization, already given sort of quite an impetus because of so the Paris Accord and others, but in an environment where Europe, the US, and the partners are really trying to understand what levers can be used against Russia's aggression. In that environment, getting the right mix towards accelerating the process of decarbonizing economies entirely versus looking to other suppliers. And so for a country like South Africa, in the near term, we benefit a little bit as the price of coal has increased significantly, but a real question as to whether this near-term benefit might become a medium or long-term challenge. But away from sort of Russia, Ukraine, and quite topical, Nigel, given you're working from home, before this call we're mentioning, I was working out of my parents' basement in Canada for a few weeks as I inadvertently got stuck there, having come down with COVID on a little bit of a family holiday. Here in South Africa, I think it's two things are kind of clear. One, the fifth wave of the coronavirus is here and in size. And we see that whether you look at sort of testing stats, the number of confirmed cases. And so the question will immediately be, are we, or should we be preparing for another big hit to economic activity, right? I think one of the lessons that we've taken thus far, and I think the early evidence with the current dominant strain of the novel coronavirus, at least as we're seeing here in South Africa, is that probably the economic impact of the fifth wave, like the fourth wave versus the third versus the second versus the first, the economic impact of each of these subsequent waves has been a little bit less. The graph on the right is showing data from Google Mobility going back right to the onset of the pandemic here in South Africa. And the way you read this is sort of the more negative the number is, the less activity there is in that space, whether it be sort of awkwardly labeled here as other retail. That means essentially retailers that aren't food and pharmacy. The idea being regardless of the pandemic, people were still out buying food. In that space, you can see that activity, or at least footfall, has never been larger. You get these small dips when social distancing restrictions are announced, but each time it's much less than the time before. The black line here is workplaces. And what you can see there is that it seems to be the moment people are given an excuse to work from home again, they rush home pretty quickly. But otherwise, it's very clear that each time we have a wave, the economic impact is that much less. Now, within that space, I suppose there's quite a positive story for South Africa here, but then I'm going to talk through some of the challenges. And one of the positive stories is that when myself and the colleagues here within research at the beginning of 2020, at the beginning of the pandemic, we sat down and thought, oh my God, how are we meant to model this, right? Certainly, we were still caught out by just how severe the early contraction in the economy was. We will use the data here non-annualized, but non-annualized in the second quarter of 2020, the South African economy shrunk by about a sixth. I mean, that is unprecedented. And at the time, we were really worried that recovery from that in South Africa was going to take 4 or 5 years, right? And all of the social strain and the real economic pain that households and businesses would take over such a lengthy catch-up period. The graphic on the left here, the yellow dots were our early forecast. The red dot was, bless us, that's what we thought was going to happen before a flu emerged in parts of China. The dark line is kind of where we are right now. And the short story in the space is we think the economy's not far off, maybe a quarter, maximum 2 quarters, from being back at least to where it was before the pandemic. So that's much more resilience than we anticipated. And it's particularly impressive because different from rich countries, different from some emerging markets, of course, the ability of the government here in South Africa to really pump prime, to really help households, to help businesses through the very difficult period of extreme social distancing, was much smaller. Our single biggest program here, and it's benefited nearly 20 million South Africans each month, is now called the Social Distress Relief Grant. Well, that's 350 rands. And for those of you not thinking in rands, but thinking, for example, in US dollars, that's barely $20 a month. So these are not huge checks being sent out. And so our expectation was the damage would be more serious and more long-lived. Now, that doesn't mean just because the economy itself is back kind of near where it was at the end of 2019, that that's true for everybody. That table on the left, if you're seeing it the same way I'm seeing it, you've got a great example of very good titles and not such a good example of all the numbers on the side. But testing my memory here, you know, the first 3 sectors that are listed here, agriculture is up almost a fifth since before the pandemic. Now the cycle there is unrelated, but we've had very good growing seasons, both in 2020, 2021, and early 2022, and that's really helped. Personal services is up 5 or 6%. Finance and real estate larger already today than it was pre-COVID. And that's great news. But that's only 3 of the sectors. The rest of the sectors here in South Africa still have some catching up to do, particularly some critical ones. Mining prices may be very favorable right now. The profitability in the mining sector is very significant, but the mining sector itself is still 4 or 5% smaller in terms of output today than it was pre-COVID. Manufacturing is sort of 6 or 7% smaller than it was before. Transport, not so much the telecom side of transport and telecoms, but transport is still significantly less. Prameshan mentioned his experiences in Asia, where the airports are getting busier, but frankly, there are just fewer flights than there were before. And we certainly see that here in South Africa now. And the construction sector, missing about a fifth, sort of evidence that infrastructure projects have been delayed and it takes a while to get them restarted. Private sector projects as well, a little bit delayed. So the overarching message here, more resilience than we had feared, but lots of sector differentiation. I think that's really critical. The next bit around this that's vitally important when it comes to sort of motivating why I think there's a bigger chance for reform in South Africa today than there has been in some time. It's just around labor markets. On the right graphic here, we're taking a look per age group, what proportion of people in that age group have any employment at all. The first of the bars is the middle of the last decade, 2015. The gray bar is just before COVID, and sort of, I don't know how we describe that color, a little bit orangey brown. That bar is the most recent data, the end of last year. So of our younger potential employees in South Africa, those 25 to 34 years old, middle of last decade, barely half of them, 51% had employment. That's gone down to less than 4 out of every 10. And what you see as you look across those age categories, the impact of COVID has been more substantial the younger you are. We see this with a slightly different lens. The graphic on the left is looking at across skilled jobs in South Africa. And so the red line measured against the right scale is the number of people in high skilled jobs in South Africa. And the data suggests it fell from about 3.75 million before the pandemic to about 3.5 million now. It's not an inconsequential fall, but contrast that to the size of the fall that we've seen in low and semi-skilled, much more jobs in that space in the South African economy. 12.6 million at the beginning, down to sort of just over 11 million now. Well, that's 15% of those jobs that haven't returned, even as the economy itself is almost back to its pre-COVID size. And so if we think about one of the longer standing challenges in South Africa, the challenge that inequality is substantial, that jobs are very hard to come by, well, COVID has absolutely accelerated that process very differently than what we see elsewhere in the world, where labor markets are extremely tight and employment levels are sort of very high of those at least interested in working. So even as the economy is recovering, it's clear that we've got an even more substantial employment challenge now than we had before. And then into this mix, and thanks in part due to Russia-Ukraine, we also have the challenge of the interest rate environment. Going into the pandemic, the Reserve Bank here in South Africa was able to reduce interest rates by hundreds of basis points, take the policy rate to which everyone's, whether it be a car loan, your credit card, a home loan, and others, all of those things are linked, able to take it to the lowest level since the 1960s. And that was a huge help in terms of supporting household balance sheets in South Africa. The graph on the left is a little bit messy, and given a choice, I'd probably tighten it up a little bit. The red line there are food prices. So our food price inflation currently is about 6, but we think it's going to go closer to 10 in the months ahead. Petrol prices are in transport more broadly already rising about 40% year on year. And of course, that will tick up and down with a combination of the rand, but also sort of global oil prices, and increasingly within that, sort of the crack differentials between global oil and, in fact, petrol and diesel. So there's an awful lot of high-touch inflation coming through the system, those sorts of inflation that people feel each and every day, and that really impact their views on what future inflation is going to be like. Headline inflation is about 6% in South Africa right now. We think it will go a little bit above the upper 6% target in the immediate future, and then trundle down a little bit. But for the Reserve Bank, they probably take very little comfort in that, because the perceptions of inflation are already considerably higher in that space. And so when we think about South Africa, almost back to where we were before the pandemic, employment significantly lower than where we were before the pandemic. The unfortunate bit here is that interest rates have already started increasing. And whether it be our own forecast as to ABSA, where what we're likely to see is a series of further series of 25 basis point hikes, or whether it's market pricing that suggests that the policy rate will go back above 7% well before the end of next year, the direction and path here is pretty clear, right? The headwinds rather than a tailwind for the economy from interest rates and monetary policy, those headwinds are going to stiffen in the periods ahead. But these first slides have really been around sort of the immediate place that we find ourselves in and some of the impulses there. What I think is important to really reflect on in South Africa are sort of the challenge that were with us before we worried about the pandemic, before we started thinking about how Russia, Ukraine sort of changes the game a little bit. And there's two observations here that are really important. The observation on the left, going back really to the advent of democracy in South Africa, is that we grew as a country reasonably quickly in the mid-2000s up to the global financial crisis. The dark line is sort of the 5-year moving average of GDP growth, right? Which peaked on a 5-year average near 5%. If you look at individual years, we got some years that were about 5.5. The bars in that left-hand graph are South Africa versus the global average. So in the early parts of the 2000s, we were a little bit better than the global average. Second part of the 2000s, we were considerably faster than the global average. This was this environment where South Africa was going to catch up after several decades lost. Well, immediate period following GFC, less good. The 5 years leading up to the global pandemic, much less good. So we already had very significant strain on economic growth here in South Africa. We were already suffering. As you can see from the graph on the right, we were already in an environment where unemployment was rising quite considerably. Again, if you can see the far right-hand side of that graph, you'll see that unemployment rate, the official unemployment rate in South Africa right now, is above 35%. And then economists will trip over themselves to explain how 35% isn't the right number. The real number is actually massively higher. It's probably the data set that we saw a page or two ago talking about just what proportion of adults are actually working. That's really critical. And the answer there is not nearly enough. Now, in that space, right, where the economy is not seeing much growth, where unemployment is very high, where interest rates are on the rise, it's not surprising, right, that whether it be from business or whether it be from labor or households, there's growing discontent here. And so let's think about two ways, or one way for each of those groups, households and business. Let's think about ways in which we can see that reflected in the data. So the left-hand side here probably focus on the household, the voters side of the equation. This is taking a look at national elections, not the local and municipal, but the 6 national elections that South Africa has held in the democratic era. The bars themselves are showing the percentage of votes cast for the ANC, the ruling party, and we'll see that that peaked just below 70% in the early 2000s as the economy was starting to do better. In the most recent election, it was less than 60%, and certainly there's lots of narratives in South Africa wondering whether that might not fall further in the next election and potentially even to 50% or others. That's evidence, I suppose, by itself of people frustrated with policy direction that the ruling party has taken South Africa. But perhaps the line on the graph is even more instructive. The line on the graph is looking at the proportion of eligible adults, people who could register to vote and then subsequently vote, versus what proportion did. And so in 1994, the scenes of the huge queues, a population, most of which had never been allowed to vote before, we saw that voter turnout was closer to 90% than it was to 80%. An astonishing exercise of democratic rights in South Africa, and a real new dawn. In the most recent national election, fewer than half of all eligible adults voted in the election. And that's quite worrying, right? Well, we could put that down to maybe there's frustration amongst some types of voters around the ruling party, but aren't there other places for that vote to go? In South Africa, in the last election, 48 parties contested nationally. So it's very difficult to suggest that there isn't somebody there that represents my ideology, somebody there that doesn't looking for a mandate to sort of generate the sort of change that I'm interested in. But voters as a whole in South Africa are saying, we're frustrated. We don't think that there is a voice taking the country in the direction that we would like. The equivalent for business, and maybe this is a stretch, but the equivalent for business on the right-hand graph is business confidence. Business confidence is the pink sort of shaded area here. And again, I'm not sure we can see all the way towards the right of the graph, but business confidence in South Africa hasn't been net positive in a dozen years. And that matters a lot, right? It matters a lot because it's really only businesses that are confident that will turn that confidence into the next investment. And in the absence of that next investment, of course, that business will struggle to grow, become more profitable, of course, you manage your margins or what have you, but it will struggle to grow. And in aggregate, if you don't have businesses growing significantly in the amount of output, not profitability, but the amount of output, then you can't express surprise that the country itself has the growth problems that it does. So not shown here, but in work that I'm really proud that ABSA sponsors elsewhere here, they do deep dives into the manufacturing sector as an example, and ask the question, what are the things that as a manufacturer are holding you back, that keep you up at night, that prevent you from investing in sort of the next activity? And in that space, for more than the last 5 years, the single most cited thing is the political climate and policy uncertainty. So households are saying they're frustrated by the choices and the direction that the country has taken. Businesses are saying we're struggling to invest because we don't have confidence. Behind that lack of confidence, we're really unclear about the direction policies are taking, and we're a little bit frustrated around the politicking that's happening. So that's sort of the state of affairs that we're in right now. Where do we turn this into an opportunity? Well, perhaps that first place we would go often for governments in many parts of the world, and certainly here in South Africa, would be government would say, well, we will lead this opportunity. We have the following X sort of spending priorities, and that's really going to move the needle. And certainly in South Africa, we've seen a chunk of that in the past. And there's absolutely demand and some appetite here in South Africa right now for further social support. So the social distress relief grant perhaps becoming a basic income grant in South Africa, again, at numbers that for the rich world seem remarkably low, but have a very positive impact on millions upon millions of South African households. But the reality in this space is that government doesn't have the financial wherewithal to lead from the front anymore. So whether we look on the left-hand side, this is a graphic looking at budget deficits and estimates of those deficits, how they've evolved over the last few years. You know, the deficit is improving, up is improving here, but it's improving to numbers that are 4 or 5% of GDP after a lengthy period of deficits that are that large and larger. The net impact of this whole thing is that in the middle graphic, you can see that debt as narrowly defined by government, so excluding the state-owned corporates and others, debt as narrowly defined has exploded in recent years. And the impact of that, right, to make that feel more real, the graphic on the right is saying, well, why does debt matter? Well, debt matters because you got to service it. To service it is just the interest payments. You know, government kind of never pay back principal, right? They always roll that stuff. So it's the interest rates that really matter. And from the early part of the democratic period in South Africa, where more than 20 cents in each rand of money collected in tax had to go just to pay interest, that fell in the mid 2000s. That fell to just 7 or 8 cents out of every rand, freeing up massive amounts of money to promote business, to provide social support and others. Well, we're pretty much back where we were in the more difficult early 90s. In the last year, more than 20% of all taxes raised in South Africa didn't go to support South Africans today during this difficult period. It wasn't able to be invested to build a better South Africa for tomorrow. It was simply spent on interest payments. And that's the ratcheting effect of year after year of the deficits. So in this space, we have growing demands for change from households and business. We need to break this spiral of very weak growth and very little job creation. We're in an environment, whether it's COVID or Russia, Ukraine, or global monetary policy, where it's just a more challenging space. And it looks to me like we can start building the case here in South Africa that meeting these very specific challenges might be a greater interest in expression of reform from government than we've seen in some considerable time. And one of the areas that we see this, and it was referenced by Prem a little bit earlier, is just in Eskom. So if we think about it in a narrow sense, Eskom is the primary electricity provider here in South Africa. Eskom first ran out of electricity to provide to South African business and households back in January 2008, 14 years ago. We've been living with this sort of problem. The problem, despite a huge build program and others, the problem has intensified significantly over this period. The graphic on the left is looking at the proportion of the generating system at any point in time that isn't available to actually send electricity out, either through the gray stuff at the bottom, either it's because it's on sort of planned maintenance. You know, you don't wait to do an oil change in your car until the motor makes terrible noises. You do it early. The orange section is unplanned stuff. That's the terrible noises coming out of the car. That system's going down. Well, in a number of periods in 2022, including just recently, we've had more than 40% of the generating capacity in South Africa offline. And that's an environment where load shedding is often announced with little notice, where the extent of the load shedding is rather significant, impacting businesses' ability to work efficiently today, but perhaps, and this is critical since 2008, perhaps also really managing down the ability of South Africa to sort of grow going forward as businesses say, well, I don't know I need to be making the investment in extra capacity if I'm not sure I'm maybe going to have enough electricity for the current capacity. So in this space, right, there's a couple different approaches. And for sure, the first approach has been to capacitate Eskom. So enormous build programs and these huge coal-fired plants, unfortunately, have been delivered late and over budget and underperforming, but also the first signs of a government that was willing to think about reforms and opening the economy in ways that were different from before. So the graphic on the right is just looking at sort of renewables in South Africa. That program started back a decade ago with the first sort of bid windows open, financial close, and then you install sort of solar and wind. As we sit here today, at peak capacity, solar and wind in South Africa would be able to produce energy equivalent to about, say in rough numbers, 15% of what Eskom itself is able to provide. So that's not insignificant, and no doubt it's helped avoid even more significant load shedding than we've been facing already. If you think, and this is the red line in the graph, if you think about where we have already signed deals as a country, where projects are already sort of ready to be built up, you roughly double that. So we're getting to plus minus a quarter of installed capacity would be sort of peak capacity of these renewables. And it's not just renewables, we're now getting better legislation or more lenient legislation around embedded generation, around cogeneration and others. And so I wanted to use Eskom or electricity as this combination of, gosh, the challenge is really big, but on the other hand, it's sort of forced different thinking and increasingly government leading from the front in this space around a reform agenda. There's an awful lot that needs to be done when we think about structural reforms in South Africa. Certainly there's, I think, a well-placed frustration that more hasn't been done sooner, that so much stuff is taking so long. But in that space, I think it probably makes sense to reflect on where progress has been made and recognize that this is big steps forward. So whether it be in electricity, we've spoken about renewables and we're in the process of another big expansion on that side, whether it be around increasing dramatically the scope for embedded generation. So firms sort of either creating their own electricity or creating their own electricity and being able at some point to be able to sell that on, around sort of splitting Eskom up so that we better understand where the efficiencies are and we provide an environment where real competition in electricity provision can enter into South Africa. Huge changes have been made in that space. We're starting to see the same kinds of impulses around sort of a transport industry, whether it be corporatizing the National Ports Authority and getting ready for sort of private sector involvement in the running of some of South Africa's or Africa's largest ports, whether it be around bid windows for private participation on the existing rail network, whether it be thinking about our roads policies and others. There's huge change in the way that government thinks about this. There's a recognition that private sector is going to need to be involved in a significant way, and sort of a hope that this will start freeing up some of the very serious bottlenecks that we have in network industries. Telecoms is a similar example, right? Frustrating that our 5G licensing, or the spectrum, I suppose, that 5G will run on, took more than a decade to finally auction, but we've got those auctions now sort of done. And so progress that hadn't been made for a long period of time, we're kind of there or thereabouts. We're starting to make sort of legislative and regulatory changes in the water sector, recognizing that just like electricity and transport need huge investments in infrastructure to provide services that businesses and South Africans need. In water, we're going to be going down that same route. And then smaller but critical things, particularly for businesses that are looking to set themselves up in South Africa, things like critical skills visa and other sort of immigration issues. For a country where unemployment rate is already over 35%, anything that makes it easier for foreigners to come into South Africa as employers, you can imagine is politically quite contested, but progress is being made there in a meaningful way. I don't want to sound too rose-colored though, because there are an awful lot of areas that weren't on that first slide, and they weren't on the first slide not because the font would be too small, we couldn't read them. They weren't on the first slide because there are areas in which not much progress has been made. And so whether that's around sort of labor market reform or safety and security, whether it be around sort of ensuring that we're able to capacitate young people through a much more effective education system, or retain workers that are displaced by moves to new types of economies, whether it be recognizing that the fact for the mining sector, the fact that you got the stuff in the ground doesn't mean that it's going to get pulled out. You need to have a conducive regulatory environment. You need to have sort of sensible rules so that companies are willing to take the 10 and 20 and 30-year investment to build a mine into a proper operation. Then, of course, around more efficient workings in government and sort of generating the performance you need for the money that you spend. More broadly, it's around the more than 700 state-owned companies in South Africa, and trying to recognize sort of which ones make sense, which ones don't, which ones are kind of fixable, and which ones probably need to be exited. And then as a headline grabber on this entire list, there's probably a few things more emotive than land reform and housing policy. But certainly more needs to be done in that space, and very clearly sort of a continuation of the policies of the last 2 decades going forward cannot be the answer for any of the stakeholders. Now, within all that, certainly we've seen some important successes already, right? So we'd highlighted earlier that private sector investment in South Africa has been very low over the last year. But starting back in 2008, President Ramaphosa launched the South African Investment Forum. It's an annual event. It takes place here in Sandton, it's in the very next block from where our ABSA corporate and investment banking offices are. In that space, and over the 5 years that this has been going, we've had more than R1 trillion of investment being pledged already, of which about a third of that has already been delivered. In the most recent investment forum in March of this year, you had another 80 projects announced worth almost a third of R1 trillion. And perhaps just as interesting as the headline numbers are where those monies are going. Historically, people think of South Africa very much as a mining center, and about a fifth of the investment that has been announced over these 5 years for sure is going into the mining sector. But manufacturing is similarly large, if not larger, whether it be in the auto sector, whether it be in sort of value add around food and beverages, or other types of manufacturing stuff. Infrastructure in logistics is about a sixth of the total. Energy itself, for all the focus on renewables, it's only 4 or 5%. Now, this reflects broadly the really exceptional diversification of the South African economy, not just in comparison to our sister countries here on the African continent, but amongst emerging markets more broadly. But it also reflects sort of where the opportunities are seen going forward. And so that's really quite heartening. So that's sort of the talk that I wanted to give. As I said, I wanted to think about the challenges that Russia-Ukraine generates for us, the ongoing challenge of COVID, but putting that in the context of a country that was already sort of struggling to grow, but through the frustration and sort of the investment strike of business, through the polls with households, I think government getting a message here that leadership in terms of direction going forward is going to have to be much more business focused perhaps than state focused, and evidence, early perhaps, but evidence that there is a greater push on structural reforms, that there's more success here than failure, and some really nice numbers from the investment forum that money is coming in. So that's really the talk that I wanted to give. Thank you very much for your attention. And I think, Nigel, I've left, 12 seconds or something for Q&A.
Yeah, thanks, Jeff. We do have some questions, so that's great. The first question is just, what is your or ABSA's view on the possibility of renewed protests and violence, like we saw in KZN last year, with the with the numbers that we're seeing coming through your presentation?
Sure. So myself and the team were macroeconomists, so I wouldn't purport to be a sociologist or a security expert. But if we think about the various drivers that were likely to have combined in different ways to generate the unrest of last July, part of that is sort of a lack of opportunity, right? And a lack of employment. It's people really struggling. And so those conditions that existed last July exist now and are likely to exist going forward. Many people are in a very difficult position to provide the basic necessities that their family require. I can't imagine what it must be like to be in that position. We have also, on top of this, huge political contestation within the ruling party. Not just the normal difference of opinions, but of course, as part of this huge fight against corruption, sort of the uncovering through the Zondo Commission of decades of malfeasance in South Africa, you now have a set of people for whom, right, the fight back, not the fight against corruption, but the fight back against the fight against corruption is existential for them personally. And in that space, there's probably very little doubt that some of the violence that we've seen is around just trying to stir up emotions and make things more difficult in order to score points within the contestation. So both of those factors are still very much here. Against that, I suppose, you would imagine that you have a security cluster, whether it be the police or the intelligence services. Let's hope it doesn't get to the point where we need to put troops on the streets again, that are much more aware, that are much less likely to be caught as off guard as they were before. And so it's not all the same conditions as we had last year, right?
Yeah, sure.
But I certainly think it would be a brave, naive person that suggested that this is one and done. Maybe missed in all this. Service delivery protests, significantly smaller in scale, right? Not making the front page headlines globally. Service delivery protests happen in South Africa each and every day. And if you track those over time, the number of those is rising. And that's people expressing frustration. They're frustrated because they're not receiving the public services that they would like. They're not receiving. So we have, I think it would be rude to those directly affected by what happened last July to suggest that that was part of our noisy democracy. But that caveat aside, South Africa has a very noisy democracy, and that's likely to be with us for some time.
Thanks, Jeff. Just two more questions then, and then if we get any more, we've got a few more, we'll tackle those directly through Prem. But one question here is, last year we discussed the need for government infrastructure spend. There was the right noises coming out of last year, but the current fractional battles playing out in the ANC, is that affecting the required spend? And is it realistic for us to expect SA to compete with other African countries like Egypt as a prime investment destination unless the required reforms take place?
So I think there's slightly different questions. The first is maybe a broad observation that there is a huge need for an infrastructure upgrade, right? Whether that be in the ports or rail, whether that be in electricity or road, whether that be in education or health. But I think the growing recognition within government is that infrastructure spend needs to be enabled by government, right? Regulatory, environment, what have you, but doesn't need to be government infrastructure itself. And so if we think, for example, about the challenges of some of South Africa's largest ports. The World Bank put out a report and suggested that Durban port is sort of the least efficient port of more than 300 globally. I mean, that's a horrific statistic. Yeah. What is sort of the response to that? The response to that is the corporatization of Transnet National Ports Authority, and an expectation that in a meaningful way, we're going to be bringing in private sector partners to help run the ports and to help provide the huge infrastructure spend necessary to increase the capacity of those ports. So on that side, it's a slow process, but I think important changes are being made in a recognition that this isn't going to be just on the government purse and government run. The second question was around, do we really think that South Africa can be an appropriate African investment destination if you're up against other countries? Well, listen, that's going to be a question that might be different for each sector and will be different for each company that's there. What are South Africa's advantages? Well, if we think about regional markets, South Africa is by far the largest, most sophisticated economy in Southern Africa. And so as a launching point, as an opportunity elsewhere here in Southern Africa, it's probably difficult to find others that are comparable. If you're thinking about the continent more broadly, again, we would need to think about sort of the regulatory environment you're in. You would need to think about just simple things. For example, I want to run a business. I need probably going to need deep liquid capital markets. Not all the money for that business is going to come from overseas. Even if I'm running a business that money is going to come from overseas, I need to have ready access to FX, both in and out, at rates in which I can rely upon, and size liquidity that is always there for me. Well, South Africa is by far the most favorable country when it comes to metrics like that. The transparency of the fiscal process, the transparency of monetary policy, the depth of the markets. Let's not forget, there's an awful lot of things that South Africa does really well. And even in an environment where we focus on Eskom and load shedding and others, South Africa has vastly more electricity than any place else in Africa. It's just not as much as we need. So I think sometimes perhaps we beat ourselves up a little bit too much. We'd like South Africa to do better, but in many ways, I think we still lead the continent in the opportunities that we provide.
Awesome, Jeff. And the last one, maybe this is a quick answer. Any predictions on the Rand?
You know, we've had on the research side here, we have been calling for quite a resilient Rand for much of the last sort of 6 months, a year. And I must say, as a head of research, at times that call sort of surprised me. But until a week or so ago, that was very much where we're at, right? And it's because, in part, the country is running much larger trade surpluses than it has enjoyed at any time in the past. It's running the sorts of current account surpluses that are very rare in South Africa's history. And so whilst historically we're associated with bad news headline globally, Rand depreciates. Bad news headline in South Africa, Rand depreciates. The underlying flow of funds is just much more favorable in South Africa now than it was before. And that helps generate some Rand resilience. Similarly, I suppose, often where we want to compare the Rand, it's not, obviously we're thinking about it versus dollars or euros or yen or sterling. But many of these investment flows or financial flows are often sort of one emerging market country or another. And if you think about large liquid emerging markets, in South Africa, we don't have to get everything exactly right to be probably better than Turkey, Brazil, Russia. So the tricky part of this is that the countries to whom we would normally be compared, frankly, each in their own way have gone out of their way to really diminish their attractiveness as a investment destination. So in that space, listen, our expectation is the rand will be pretty well supported. There'll be periods of volatility for sure, but we think numbers like high 15s, 16s, low 16s are more likely than 17s and 18s.
Awesome.
Versus the dollar, of course.
Thanks very much, Jeff. Just in terms of any information that the community is looking for, thank you very much for joining us today. I know we were a little bit out of time, but Jeff, the information was really valuable, and I think it paints a good picture in terms of the challenges that we have. But obviously, with adversity comes opportunity. I'd like to be the optimist of the view. So yeah, we'll be putting out something just after this webinar, everybody, and you can reply with some questions, and those will be fed back through to Jeff and Prem, and they will reach out to you accordingly. Please do join us on our website for our other events that we have coming up. We've got a few lunches and some in-person events starting in Singapore, and we're looking forward to hosting those events in Singapore and in South Africa. Jeff, thank you so much for your time. I know you've been all over the place recently. Prem, I don't know if you're on. I know you jumped off. Are you there, Prem?
I am, Nigel. Sorry, I've just connectivity
No
issues.
No, absolutely. You're not load shedding, are you?
I'm not sure, to be honest.
Okay. All right, Prem, thanks so much for your participation today. Jeff, thanks for coming in, and for everybody on the webinar today. I hope that got some of your minds thinking and information that you're looking for. Thank you very much, guys.
Okay, thank you.
Recover well.
Thanks, guys. Cheers, hey.